Okay, hello everyone. It's been a while since I made a video. I think it's been a little bit over a month. It's been busy, work, family, and so forth. So I'm gonna try to make this quick video here for everyone. I titled it "How do you know it's time to get in?" We're gonna try to analyze a couple recent trades that I did, and then see if we can provide some education there. So the two trades that I'm going to go through is SMCI and URNM. And the bottom line is you got to know what you're looking for. You're going to know what your eyes are watching on the chart before you know when it's time to get in. You gotta build that muscle and be able to realize that now is the opportune moment to get in on a low risk entry. But that requires time, requires patience, requires understanding price and volume movements. And they're happening. They're happening right in front of your eyes. It's a matter of building that muscle to be able to identify that time, that opportunity. So we'll try to do that here quickly. I'm not going to try to make this 45-minute video. So let's dive in. Before we get into the trades, disclaimer, do your own homework, your own due diligence. This is not recommendation to buy, hold, or sell any securities that you see today on this video. With that, let's get to, I'm going to start with MarketSmith here, and then start with SMCI. SMCI obviously is not, it's been a stock that is known on FinTwit, but if you go back on my Twitter feed and you look at my tweets or my, I don't know, X now, you're not gonna see me talking about SMCI, and I don't believe I posted about it anytime since it gapped down, because once this gap happened on earning, the stock is now no touch until what happens? Well, first and foremost, until time builds and puts you away from this event right here. Okay, you gotta give it time. So how much time? Well, on a big break like this, like that right there, you need a base at a minimum. So if the stock turns around and just did 1 week, 2 weeks, and it's back in new highs, I don't care. I'm not touching the stock. You're gonna need at least a base to build. What is a base? I want to see more than a flat base. Flat base is 5 weeks, but I want to see more. On a break like this, on volume, I want to see a base build, and that's 7 to 8 weeks. From there, now you know you need to wait 7 to 8 weeks on the stock. From there, you start watching and seeing, was that enough? What is price and volume telling you? And is that 7 to 8 weeks enough? Okay. Now, the way you do that, you can watch that on the weekly or watch it on the daily. I normally, look at the stocks every evening. Okay. So let's go through that here and then figure out when was the stock ready to be bought. Okay. Here's your break. And then here's your first rally. Wedging. Obviously, that is too soon. That's what, 2-3 weeks? No touch. You know you're not going to touch the stock. So it doesn't matter what it does here. It's too soon. Wedged up. Selling comes back. Breaks it down. Now, what happens with that breakdown? Here's your low. Here's your lower low. What does that mean? There's no indication that the trend is changing and buyers are coming back. You're making a new low. So sellers are dominating. What happens next? You rally, you undercut this low, and then buyers come in and rally it all the way to, I don't know, a little bit, mid of the gap. You still have this in your mind. You're not doing anything yet. You're still waiting. You get this rally again. It's also wedging. And now you have the 50 MA sloping down. Still no touch. And what happens? What I normally say, you guys hear me say that on my previous video. Wedges often correct. Wedge up, correct. Wedge up, correct. What happened with that correction this time? Again, broke the low, undercut, and rally. So you got low, lower low, lower low. But what's happening is interesting. It's breaking the low, but there's sellers are drying. They're not coming to take it even lower. So undercut and rally, undercut and rally. So there are buyers that still want the stock, but we don't have a setup yet. We don't have a low risk setup. This is not a setup yet. It's too early. And I'll show you on TradingView here in a minute. Why is that? And then you get your another rally up. Still does not look the best, but it's not as wedgy. So the character is changing, and now it's looking better. And then it pulls back on less selling right here when this pulled back. And this is when I started getting really interested in the stock. I'm gonna go to TradingView and then kind of show you the volume pattern there a little bit better. I bought the stock coming out here. So let me show you that. So let's go to TradingView and then talk a little bit about that. All right, so we explained all of this stuff here. And this is why I like TradingView, is because of my volume indicator here. My pocket pivot volume indicator shows me really the selling that's happening. Lots of selling here, and you're still seeing wide range bottom red, and then coming back down, up. Then you're coming back down on volume, and then you're wedging up, and then right here is when the characters start changing. You're coming back down, but you're not coming back down on volume. There's no distribution. There's just one, and then you go tight. You go back above the 50 MA. Your 50 MA now is turning green versus red. This is another character change. And now what's happening here is that you rallied back up, and this time you're rallying on buying pressure. Your pocket pivots started to show up on your chart. They're red, a lot of red drying out. You got distance from the gap, and then you start seeing green and blue coming back, right? And then this one here pulled back. There's volume here, but this is the biggest sell was right here. At the end of the year, beginning of this year, when you saw Uber, CrowdStrike, Melly, on and on, these growth stocks that rocket in, they start pulling back, and a lot of them on good volume, on heavy volume, and I mentioned that on Twitter. What did SMCI do? Pulled back 1, 2, 3, 4, 5 early in the year, and then no high volume. That was your tell. That is when you know this stock is changing its character. And what you also notice right here, this is a higher low than here. Lower low, lower low, lower low. Now you have higher low, and then your volume patterns start changing, pulling back while the market is selling off early in the year. No one is selling SMCI, and it turns right here. This is your point right here. I'm out of the stock. I sold a little bit here, and then I sold all of it here, closing the gap here. So I'm out. Hopefully that helped with the change of character, right? Wedge in, correct, wedge in, correct, wedge in, correct. Selling, red ending. Start seeing pocket pivots, volume drying out. That was the last clue. 50 MA sloping down, 50 MA turning around, lower low, lower low, higher low, higher low. And then you get in, let's delete all this stuff. And then you get in with, let's use our tool here. You get in right here. Your stop is down below here. You got 1, 2, 3, 4 R. Okay, I sold some here, and then I sold some here. All right, it's getting a little long. Hopefully this helps. So let's go to URNM. Okay, I bought this one here, and let me go to trading to MarketSmith first, and then let's go URNM. I've had this on my watch list for a very long time. Base on base, I pointed that out on on X. But I've been watching uranium for a while, and I posted about this when it was building its cup with handle here. So it's building base on base. I was in CCG. So let's see here. This is the cup with handle, and broke out on the 13. I wasn't interested in buying this because there's just a lot of red here, and I was looking at CCG as the better play at that time. So let's go back to URNM and see when it tried to broke out of the handle. That was on the 13. And if you see what CCG was trying to do, CCG was looking much better. It did its cup with handle, and then it broke out on the 9th, which is a few days before Uranium ETF itself. I bought this one right here coming out, right here, and I sold it. I think I sold it up here somewhere, half maybe, and then another half here on this reversal candle. But this is how I played it back then, and I continued to watch UCCG, and then I continued to watch Uranium ETF until this happened here. Okay, so similar story. It's building base on base. There's still some selling coming in, and then all of a sudden you see it tighten up, and then all the selling that happened early in the year, the first week, no one was selling uranium, and that put it at the top of my list as to why now I am interested in finding a low risk entry. Volume was my tell, just like volume was my tell over on SMCI, and then it's essentially just bought it above the high right here. So let's put our multiple to risk. My stop was down here. And you got 1, 2, 3, 4, 5, 6, 7 multiple, right? I think I said I sold some a little bit here, and I sold obviously most of it up here. I think there's a lot of supply issues with uranium. Can this go a lot higher? Yeah, sure, of course. But I've been kind of selling into strength. This is kind of really my character is I sell quite a bit into strength. So those were the two trades. One of the two trades. I'm not a genius, and not all my trades work. Frankly, 50% of them don't work. So let me show you a loser, because I'm not here trying to show you winners. I'm here trying to help you read and understand when it is a time to get in. Affirm, I posted about Affirm on Twitter as well. I bought it 2 times. I bought Affirm turning back here on this day, and then I added to it when it took out this high as well, and then I sold it on this day, I believe. I sold it right here on this day, and I think I posted about it on Twitter, and I said I'll be back. Let's just wait for this to come down. Obviously, from the point I sold it, it went up another 37%, and now it's up 9%, 10% away from where I sold it. So I tried to get back into this. Here. Let me put that. Try to get back into this. I bought it right here as a high tide flag entry right here, and then I got stopped out on this day. Okay, so give back some of that profits from this trade, but you gotta try them. This is a high tide flag, pretty aggressive. But what I liked about this, and the reason why I was a little bit aggressive on this, is because pulling back on no volume, up on huge volume, pulling back on no volume. I mean, there's really a lot of selling here, and this is why this failed. Wedging up after a lot of selling, wide range bar, then you break down 21 in EMA, should hold. Now you start looking for low risk entries. I tried this one, didn't work. I'm watching this. I'm hoping it'll set something up here. I think from a kind of theme and fundamentals for Affirm, buy now, pay later, is appealing, and the institution seems to want this stock. If we want to analyze this trade here, some of you, this is obviously cup with handle. Let me draw this quickly, cup with handle, right? And then maybe some of you would say, well, why didn't you buy it here, right? Maybe if you bought it here, I don't know what happened that day, whether it took the high and then took the low, but potentially you could have stepped out. I don't remember why I didn't buy it here and I bought it here instead. I think it was just too short right here. Like if you just take it back like this, and then you try to take a look at it that way, it just felt kind of too short. You know, just going. Whoop, let me put that there. Just went up like this, and just I don't know when they pull back, and then just a doji bar. I think that's why I kind of like no, I just gotta give it a little bit more time. And then after that you get this bar here, then you get another hammer doji, and now it starts looking a little bit more appealing because volume is drying out right here down there, and then it's moving sideways. So you got 1, 2, 3, 4 days sideways versus just 1 or 2. So I think that's what happened, and then that triggered there my stop limit. Then I really like this pivot right here at the top, and then I added to it the next day, and then boom, got lucky there. Volume dry out right there, you see it, and then volume expansion, volume contraction, volume expansion. So that was a really good trade. I believe that was many multiple of my risk. Let's put that measuring tool. Let's say our average was somewhere around here. The stop was down here. I think that was 1, 2, 3, 4, 5, 6 multiples of my risk. Anyway, I think I'm gonna just leave it at 15 minutes here. Hopefully that helped. I appreciate you guys, and good luck, and we'll talk to you later.